This is an objective short trade entry and technical analysis on DoorDash Incorporated, a company of the technology sector and internet information. Here off the 300-minute interval, we have this primary downtrend line off the December 2021 reactionary highs, multiple reactionary highs to help validate that. We've effectively put in a big, steep negative divergent high, bearish and negative divergences really on all four indicators going back all the way down to the stochastics here. And we are at a key pivotal inflection point. Risk reward ratio favors to the downside. It's a very popular stock off of Wall Street Bets, and it is a completely crowded trade here. And the risk reward favors more downside to come. A stop loss of about a 5.5, call it a 5.5% stop loss. Taking out that previous high there would probably take a really, I would only suspect a very large stock rally to the upside, sending in a potential short squeeze. If there is no if there's not enough buyers to meet that demand, first target here for an 8.2% drop, down to 56.05 for a 17% crash, down to 51.76 for a 23.4% crash, down to 46.36 for a 31% crash, and then 42.43 for a 37.2% crash. And if we were to take out that 42.43, if we even get down to that level, I'll definitely have an update by then. But if we were to take that level out, I would only suspect a really waterfall type selling sort of event right there. That is a big support level, multiple reactionary lows to help validate that. Call it the all-time lows of DoorDash, and there would be no support below. We'll see what happens. Great risk reward ratio, skewed to the downside with some bearish developments starting to take place. Really need to see that one quick slash move on a complete backfill of the gap to start having that stochastics get up in that range of a very damaged level, in my opinion. So we'll see if we even get that crossover on a complete crossover there on stochastics, and a move like that would, I believe, start to send the stock rolling to the downside pretty quickly. One last stock I wanted to bring up here, also a big crowded trade here. A lot of longs, a big resistance up above here, right off the February reactionary highs, cuts right through multiple, and we're starting to have that reaction here where the risk reward is skewed to the downside, going off that first target to 1706, which coincides with a 50% fibs retracement down for a 9.4% drop, down to 1562 price support, which is 382 fibs for a 15.4% crash, down to 1443 for a 22.4% crash, and then down to the 236 fibs, which would be good for a 30% crash. And if we were to take that out, I would only suspect a big waterfall selling